All right, today we're talking about Mishta loans and down payment assistant programs and how they can help you reach the dream of home ownership with less upfront cost. Today I have Mishta, a top Mishta lender, as recommended by the state of Michigan, joining me here today to discuss Mishta loans. So Gordy, would you go ahead and introduce yourself and tell us a little bit about who you work for?
Sure. My name is Gordy McDougall, and I've been here at Ross Mortgage for a little over 11 years now. I've been in the business for 32 years. And I've been doing Mishta loans pretty much my whole career. I work a lot with first-time home buyers. So that's about me right there. So
excellent. Well, I appreciate you taking the time to schedule this interview with me, and so that we can help home buyers.
Yes, it's my passion, actually. Probably 70% of my loans are first-time home buyers. So
perfect. Absolutely. Awesome. So we'll go ahead and get right into the questions, kind of Q&A style here. So first question that I had for you is, can you briefly, in a high-level overview, tell us what Mishta loans are and how the down payment assistant program works?
Sure. So Mishta, which is an acronym for the Michigan State Housing Development Authority, which is obviously the state of Michigan. And it's an assistance program for people that, just don't have the down payment or the closing costs, come up with 10 or 15 grand. There's $7,500 and $10,000 available in certain areas. $7,500 is available anywhere in the state of Michigan. It's a great program. Like I said, it's been around a long, long time. And probably the last 10 years, they have become very, very user-friendly. They don't really put any hindrance on much of a time frame from a regular FHA or conventional loan. So, they're a very good loan to have for a first-time home buyer. Simple as that. It's no gimmick to it or anything.
Absolutely, yeah. So you mentioned a little bit of user-friendly. We're going to go off script here. And can you tell me a little bit further and expand on that in terms of if they're more difficult to close or get than those your other traditional loans that most people might think about, or that banks are trying to push, like the FHA or conventional loans?
Right. Yeah. Well, it's kind of real estate agents get a little worked up about it, because it could possibly take 5 days longer, because the loan, basically what happens with us here, we underwrite the loan. We get the loan basically to the closing table, and then the loan goes over to Mishta. And then they look at the things that make you qualify for that loan. And sometimes they're on a 1-day turnaround. Sometimes they're on a 3-day turnaround. But once we get that loan back from them, 95% of the time, we are clear to close. We're ready to go. Good. Sometimes they will ask for something, but if they do and we get it back, they clear that condition the same day. There's no waiting on the condition. So they're very, very user-friendly. And I can talk to them. I can call them if I do have a question. Unlike in the old days, they were not. And so I think they still have the reputation from the old days with real estate agents, but they're not an issue now at all, to be honest with you.
Yeah. So to summarize it, basically all it does is it adds one extra review step in the process that most people might expect.
Exactly. And like I said, we do a lot of them here. So when we send our loans to them, they actually love our loans because, like I said, we're basically at a clear to close when we send a loan to them.
Absolutely.
Like I said, they might find something small that we get, and boom, we're done.
All right. Perfect.
Yeah.
And then, you mentioned a little bit of the difference between the 7,500 and the 10,000, and we're going to dive into that. So if you're watching this video, be sure to stick around towards the end, because we're going to talk about how you can actually get that extra 2,500 in down payment assistance. So with that said, a common question I hear often is about the money. Is it free or forgiven, and do people have to pay it back?
Yes. It is not free. It's not a forgivable loan. And yes, you do have to pay it back upon closing up. If you sell the property, the money will be due then. Refinance the property, it would be due then as well. So the 7,500, let's say we're doing the 7,500, it sits there basically as a second lien on the property. It does not accrue any interest. You're not making any payments toward it. So if you sell the house 10 years from now, the 7,500 would be due at that time. Or if we did a refinance like I'm doing with a lot of my clients, from a couple of years ago, and we're paying off that 7,500 with the refinance. So it is not forgivable. They used to be forgivable a long, long time ago after 5 years, but not anymore. A loan came out in 2018 where they were given the $15,000, the Step Forward program. That was possibly the greatest first-time home buyer plan ever. Hopefully they'll bring it back.
Yeah.
But that program was $15,000 and it's forgivable after 5 years. So I have clients that are actually going into this year, at the end of this year, and that loan is gone. That $15,000 is gone.
Mm-hmm. Yeah.
But unfortunately, I haven't heard any rumors about that coming back.
Yeah, me neither. Yeah, I've had a few clients buy with the 15,000. It's been great because you've had, the loan sort of going down, but then you've also had house values appreciating, and suddenly there's all this equity for a first-time home buyer that they never even could have imagined. So.
Right.
And then let's talk about what are the requirements for MSHDA? In other words, like how do we qualify for it? And if you could add some comparison factors and how that looks in comparison to FHA or conventional loans. Is it harder? Is it easier? About the same? What do we kind of see for the requirements?
Sure. MSHDA has its own requirements to do the MSHDA loan. Mm-hmm. So, and that's, and it's 4 things, and we make it pretty simple. First one, obviously, you're a first-time home buyer, which, by the way, you're considered a first-time home buyer after 3 years of non-home ownership. So if you owned a home 3.5 years ago, you're considered a first-time home buyer now.
Right, like those during the Great Recession and then possibly lost it through foreclosure and haven't owned a home since.
Yep. If you sold your house in 2018, we can do the MSHDA program with you now. So then the second thing is credit score. You have to have a 640 credit score for the MSHDA program. So, we check that. And if, let's just say you're not quite there yet, I can definitely, I'm not a credit repair company, but I can definitely give you some advice, help you to, get the scores where we need them. It's not very difficult in this day and age, the way credit scores move now. Right. So, we can get it done. Then there are income limits to the program, which is different in each county, which is a list that I have. But for instance, in Wayne County, the income limits for a single person are $80,000 a year, your income. For a 3-family, it's like $94,000, mm-hmm. Husband and wife and a child. So the income limits are pretty, those are pretty generous.
Right.
It's not like there's another program I was doing for a while there, and the income limits are like $35,000 a year. It was a little tougher, but and then thirdly, you cannot have more than $20,000 in your bank accounts.
Okay.
Now that does not include 401k. If you have a 401k and you got money in there, that does not go towards your assets. So you cannot have $20,000, more than $20,000 in your checking savings, mutual fund, if you're going to be using that to do the program. So basically, those are the 3 things that qualify for MSHDA: credit score, income limit, and then your assets under 20 grand.
Okay.
And that's it. Okay. Then it becomes a regular loan from there. Mm-hmm. Then it's either an FHA or conventional, whichever loan we can do with you.
That makes sense.
It's really not that hard.
Yeah. To expand on the assets, and you kind of mentioned it with the income too, does that, like with the assets, do we have to look at that as a household? Like if a husband and wife maybe has separate finances and they keep their bank accounts separate, or how about like a kid's savings bank account? Maybe grandma put $5,000 into the account. Does that count as well in a total, or do we look at it individually, 20,000?
Well, it's a family thing. Yeah, it's because if you're a husband and wife, and we're probably going to get it in a little bit, but husband and wife, you have to both go on the loan. Mm-hmm. So your assets will be, both will be included. Now, if you have a separate bank account, from grandma or something, yes, you are supposed to, show that. Like I said, but 401k, that kind of stuff, IRAs do not count toward the assets.
Okay. All right. That's fair enough. Fair enough. And then about the program, like who do you see this program being really good for, and who's, kind of MSHDA designed for?
Basically, it's designed for people that just don't have the down payment and closing costs right now to get into a house and, to get their first home. So that's why this program is great. We get so many people in because, you know, the average, what you do need on a MSHDA loan, you have to have a 1% investment. So say you're buying a $150,000 house, you have to have $1,500 invested. So that will be what you have to have invested in the house. If the taxes are a little higher on that house or whatever, you might need $2,000 out of pocket to do that home. Mm-hmm. And then the MSHDA money will cover the rest. Right. Which means if you didn't have the MSHDA money, you would need, you know, $9,000, $10,000, $11,000 to buy the house.
That's a big difference.
That's what, you know, directly is good for.
Okay. Yeah. Big difference. Yeah. Big difference. And then to further add about the qualifications of where they can buy, are they able to buy anywhere in Michigan or just certain zip codes? And here, if you would, you know, share with us the how a home buyer can get the $10,000 down payment assistance program.
Sure. The $7,500 is available anywhere in the state of Michigan. That never runs out. It's always available. They came out with the $10,000, I believe about a year ago right now, where it's 236 zip codes are available in the state of Michigan, which again, I have. You can also just, you know, Google MSHDA 10,000 DPA program, down payment assistance program, and it'll come up on there. You know, so
I looked in Wayne County. It's pretty much almost every city, with a few exception ones like Riverview and stuff like that, and downriver. But a large majority of the Wayne County cities qualified.
Correct, and that is correct. Yeah, and that's the same way as the 7,500. It's still, you know, if you sell the house, you still have to you know, pay the $10,000 back at that point. So it's not like that program we had in 2018. But if there's, with this program, though, sometimes there's some money left over, you know, and we could put a little more money down on the house out of that 10,000. You know, if it's covering your down payment and closing costs, sometimes if we're putting 3% down, we could put 4 or 5% down because we have that 10,000.
Absolutely.
We can actually do a little more for down payment.
Good. And to kind of further, if we were able to do that, what do you see sometimes? Obviously, aside from a lower monthly mortgage payment, is sometimes, can there be interest rate savings or anything like that if we're able to go from 3.5% to maybe 5% down?
No. What happens with the interest rate with the MSHDA program is they actually dictate the rate.
Gotcha.
So there's no bargaining there. Or you say, hey, I got this rate here and there. MSHDA rate, like right now, the current MSHDA rate is 3.875.
Okay.
And that's it. Boom. And they've been like that for probably about a year now. You know, it hasn't moved. So they were a little higher rate back in the, you know, obviously rates are starting to go up now.
Right.
But they were a little higher, obviously, than what you could have got from a regular FHA loan.
Sure.
However, you still would have needed the $10,000 to $15,000 to do it.
Right.
Buy a house.
Right.
So they move their rates, you know, every so often.
Okay.
You know, so right now it's 3.875, 30-year fixed rate.
Makes sense. Yeah, makes sense. Yep. All right. Well, that's perfect. I think we got a good explanation of the MSHDA loan program. And so let's say I'm somebody who's watching this video interview and I decide that I'm interested in a MSHDA loan. How do I go about getting one, and how do I go about reaching out to you? And can you help anybody in Michigan, or are you limited to just your geographic location within, you know, Wayne County or something?
Oh, no, definitely. I do loans. I'm doing one actually right now up north, you know, I missed a loan for a friend of mine that moved up there. So anywhere in the state of Michigan, I could give you my website, my number, you know, to get a hold of me on this. I'm at Ross Mortgage. My website is gordiemac.com, which is GORDIEMAC.com. And I'm in the Allen Park office. But yes, we do everything now, as you know. You know, you can fill out your application on my website. We do everything virtual. Yeah. So, I mean, it's quite easy, but I can usually do my pre-approvals in one day. I can let you know you qualify and yes, you're approved for this much.
That's perfect. Awesome. All right. Well, I will make sure to include your contact information in the link description and stuff below with the video and everything, so that people can get a hold of you and hopefully kind of start a dialogue or a conversation with you to make sure, you know, see if a MSHDA loan might be a good fit for them. So
Great. I appreciate it, Alex. Yeah, and like I said, it's a great program for the first-time home buyer, no doubt about it.
Absolutely. All right. Thank you, Gordy.
Thank you.